With Bitcoin experiencing a near 28% retracement from our most recent all-time high, many investors begun to question whether we'd potentially already topped out this cycle. So here's a macro analysis of our current bull market to see if further downside can be expected or if a new all-time high may be closer than we thought. Today, we're going to be doing a Bitcoin macro analysis to try and gauge where we may be in our current market cycle and where better to start than the Bitcoin growth since cycle lows chart we have here on BitcoinMagazinePro.com. So if I just zoom in, we can actually see that this current cycle, we're actually outpacing the previous two cycles, which almost rejects the theory of diminishing returns that you've probably heard on social media, other content creators. We've even discussed it on this channel previously. That maybe as Bitcoin grows in its market cap, that the exponential return may not be as exponential, which makes sense. The capital inflows required to move the market cap of $1 trillion asset is significantly higher than the capital inflows of a $50 billion asset. But the fact that we're actually outpacing the previous two cycles shows that Bitcoin is in a very healthy place and is, like we said, far exceeding probably most investor and analyst expectations. But as we've seen a 28%, nearly 28% retracement from our most recent all-time high, we said around $74,000. Many people, of course, began to question whether that was the cycle peak. Maybe Bitcoin's due for another bear cycle. 25-30% retracements are very common during Bitcoin bull cycles. If we just look here, we can just isolate each cycle by zooming out and just looking at the big massive retracements we had in each single cycle. In the first cycle, Genesis 2011 to 15, we had these huge 50% retracements. 2015 to 2018, similar story. We had significant retracements multiple times throughout the entire cycle. 2018 to 2022 was even more significant. We had the COVID 2020 dump, giving us about a 60-70% retracement, was it, during what can be considered a bull cycle? So the fact that this is our first significant retracement and we rebounded almost 20% immediately gives me a little bit of indication that Bitcoin is in a very healthy state, especially where we're probably at in the middle of a bull cycle. And if we look to other metrics like the MVRV-Z ratio, this really solidifies that fact. This is looking at the average accumulation price of all Bitcoin investors and then looking at that in comparison to the Bitcoin market cap and then adjusting that for volatility. What we can do is just load up a couple boxes, which really is an area that we reach multiple times, pretty much during every cycle, where we have this mid-cycle pullback. And it usually leads to a few months of boring price action. But if anything, it's very healthy for a Bitcoin bull cycle. If we just see exponential price increases nonstop, it doesn't really give new investors the opportunity to come in. But if we just look to where we currently saw a bottom in this metric, again, we usually see quite a bit of support here. So if I just isolate a few different examples here, in 2016, 2017, we had a pump up to this line and retracement to it twice. In the 2019 cycle before the dump, we actually had, again, a little bit of a retracement from that level. In this 2021, 2022, just before the second double top all-time high, we again had a retracement from this level. And again, if we look back even earlier in 2013, we retraced after this in this double peak cycle to this area that we've again seen Bitcoin bounce from. So this is completely typical. This is exactly what we want to see during a Bitcoin bull cycle. And the irrational fear that we're seeing in the market, the overwhelming majority of short positions in the derivatives markets, is just complete irrationality for where we are in the cycle. If we just go to something like the MVRV momentum, this is looking at the MVRV ratio like we could see, and then a 365-day moving average of this. And we can see we've actually just found very solid level of support after bouncing from this moving average, which again, historically is something we see throughout bull cycles on many, many occasions. So this is nothing to be worried about. This is nothing that we need to question the bull cycle. This is very healthy. And I think a reason why we actually have seen this most recent pump and maybe what preceded that to maybe cause the dump is if we just go to the Bitcoin versus dollar strength index. We can see here that over the past few days, this has dropped dramatically, which has coincided exactly with Bitcoin pumping. And then prior to that, which actually potentially caused the dump to some extent, I know we had some minor dumping, some Germany dumping, etc. But the fact that we saw the dollar strength increasing quite noticeably definitely didn't help Bitcoin. And one thing we really need to observe, which I think will be very interesting over the coming weeks and months, we've almost been in this wedge pattern on the dollar strength index for over a year now. And I think once we actually get a decisive break to the hopefully downside or the upside, that'll give a much clearer indication of what we can expect on a macro basis for Bitcoin. If we see the dollar strength break beneath this and continue on a downwards trend, that's very bullish for Bitcoin. We see a decreased demand for dollar strength, probably in line with an increase in supply. And if we take alongside Bitcoin, which is not a deflationary asset, but an asset in which its inflation rate is decreasing, with a huge increasing in demand due to ETFs and other institutional inflow routes, really it's just a catalyst for substantially higher prices. However, we do need to be open to all possibilities, and if the dollar strength does rapidly increase, break above this wedge and potentially rally to maybe a level that we saw at the previous high on this metric, Bitcoin might struggle. It's definitely going to limit our upside potential. So this is going to be something that's going to massively influence the macro environment for Bitcoin in the coming weeks and months. And alongside that, the Puel multiple. After the Bitcoin halving, we've seen lots of miners potentially struggling, potentially capitulating, as they're just struggling to be profitable operations. We can see the Puel multiple, which is looking at Bitcoin miner earnings in USD denominations and comparing that to a yearly average. We can see very recently that this dropped to 0.59, which indicates that they were earning about only 59% of their historic average, which if you're a business and you lose over 40% of your earnings in a very short space of time, that's obviously going to be a very difficult period. However, we've now seen a strong rebound in this to as high as 0.86, which is maybe giving miners a little bit more breathing room, which also coincides very nicely with what we can hopefully see over the coming weeks, which would be a hash ribbons buy signal. So the hash ribbons indicator is looking at a 30-day moving average of the hash rate and a 60-day. And once we see the 30-day cross beneath the 60-day, that indicates that maybe a lot more miners are turning their machines off. No new miners are buying machines and entering the market to secure the Bitcoin blockchain and compete for new blocks. And we can see that this typically aligns with Bitcoin having less favorable periods of price action. But once we actually see this 30-day cross back above the 60-day, give us a hash ribbons buy signal, it's one of Bitcoin's best performing signals. And we're very, very close. We just zoom in here, especially now that we've seen some positive Bitcoin price action. The number one thing that changes sentiment in this market is price. So maybe once we see Bitcoin continue, hopefully to rally towards $70,000 or even higher to a new all-time high, we're going to see miners start to get more involved. That earning potential increase rapidly and give us a hash ribbons buy signal. And if we go to the Bitcoin cycle master chart here, which is collating a number of on-chain metrics to give us a fair valuation and overvaluation, etc. of the Bitcoin price, we can see that in this most recent downwards move, we bounced exactly off what would be considered Bitcoin's fair market valuation at around, at the time, $55,000, which is a very, very good indication that, again, this was a very healthy pullback to a fair market value, especially during a bull cycle when we've seen this fair market valuation continue to increase for, well, all of Bitcoin's price history practically. And this is giving us an upside aggressively valued target of $95,000. And considering Bitcoin very nearly topped out in its most recent all-time high at above $70,000 at this aggressively valued line, I think that's a very good area to watch if we are to rally past our previous all-time high. And considering this metric is pretty much always increasing, it might align very nicely with that big six-figure round value that everyone's looking out for. And if we just go to one last chart here, the realized cap hodlways, which gives us a really good macro overview on where we may be in a cycle, what we can do is just isolate this. So this is looking at the influence that each different age band is having on the realized price. Or to simplify that, it's looking at how much the cost basis of each purchaser from a different time period, from 3 months to 6 months ago, from 1 month to 3 months ago, how much they're actually impacting the Bitcoin realized price, which is the average cost basis of all Bitcoin. What you can immediately see is these very warm red areas indicate new market participants, 1 day to 1 week, 24 hours or less. They're coming in and paying, frankly, very high prices for Bitcoin, influencing the realized cap massively, massively inflating that valuation of the average cost basis. And usually that coincides with market cycle peaks. And we did see a little bump in this as Bitcoin reached this new all-time high. But if I just remove all of these apart from the considerably longer time frames, so everything from, say, 3 months above, we can see that we've had almost no decrease in this, no sustained decrease. And from where we are in a bull cycle, especially now we've seen this rapidly increase, there's no real comparable place for where we may be in a cycle apart from maybe here in mid to late 2016 over a year from the all-time high we set in the 2017 cycle, maybe around here again in early 2020, late 2019, before we set a new all-time high over a year later than that. So it's looking like we potentially have over a year or more of bull cycle ahead of us, and especially as this has increased massively over the past few weeks due to our more boring price action, our slight retracement. Really, we need to be looking at probably down here towards the 20, 30, 40% for where we'd see a bottom in the amount of realized cap influence these longer time frame bands are having. And we're currently sitting at close to 80%. Also, if you haven't already, please don't forget to like this video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on BitcoinMagazinePro.com, your number one source for Bitcoin analysis. So just to summarize, throughout Bitcoin bull cycles, we typically see pullbacks greater than 25% multiple times. These have historically been great opportunities to reaccumulate discounted BTC, and this time it seems like it was no different. We've already seen over a 20% move upwards from our local lows that we have set, and we can now zoom out for more macro analysis of the market to see that we're in a very healthy position and actually still potentially outpacing where we'd expect to be at this point in the cycle when comparing to previous cycles. Maybe removing the theory of diminishing returns, maybe we're actually going to see Bitcoin set a higher percentage gain all-time high than we set in previous cycles, which would be pretty crazy for a $1 trillion asset class. And if Bitcoin continues its recent price ascent, which does seem likely looking at multiple different on-chain metrics, then we may be all set for a new all-time high. If we can break above, especially that $70,000 resistance with a little bit of conviction, then we're definitely going to approach 74, 75, even higher, potentially towards that big $100,000 level, maybe sooner than we thought. If you liked this video, then please visit BitcoinMagazinePro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And to celebrate the launch of Bitcoin Magazine Pro, we're currently offering a free trial for all new site subscribers, so don't miss out on this limited time opportunity to try all of our advanced features free of charge. Thank you all very much for watching, and I'll see you in the next one.